Welcome back to Fininsergy. If you're new here, don't forget to subscribe and turn on notifications so you never miss out on our latest financial tips. Today, we're going to talk about one of the biggest milestones in life, buying your first home. In 2024, owning a home is still a dream for many, but with the right strategies and financial planning, that dream can become a reality. Whether you're looking for a cozy apartment or your first family house, saving for a down payment and preparing for homeownership is a big task, but it's not impossible. In this video, I'll show you how to save for your first house, improve your credit, and give you a step-by-step plan to make homeownership a reality. Let's dive in. 1. Why buying a home is still worth it. Before we get into the nitty-gritty of saving for a house, let's talk about why it's still worth buying one, especially in 2024. Building equity. One of the biggest advantages of owning a home is the ability to build equity. When you rent, you're essentially paying someone else's mortgage. But when you own your home, the money you pay towards your mortgage builds equity in the property, which can increase over time as the property appreciates. Stability and control. Owning a home provides stability and control over your living situation. You won't have to worry about rent hikes or being forced to move because your landlord decides to sell. Plus, as a homeowner, you have the freedom to make changes and improvements to your property. Long-term investment. Real estate historically appreciates over time, meaning your home can be a valuable asset in the long run. While home prices can fluctuate in the short term, owning a home can be a great long-term investment, especially if you hold on to it for years. Tax benefits. As a homeowner, you may be able to deduct mortgage interest and property taxes from your annual taxes, which can save you a lot of money over time. These tax benefits make homeownership even more attractive. 2. Assessing your financial situation. Before you start saving for your first home, it's important to assess your financial situation. Buying a home is a big commitment, and you need to be financially prepared. Understanding your budget. First, take a good look at your current income, expenses, and savings. Use a budgeting tool or a spreadsheet to track your monthly income and expenses. This will give you a clear picture of how much you can realistically save each month for your home purchase. How much home can you afford? Generally, it's recommended that your monthly mortgage payment, including taxes and insurance, doesn't exceed 28% to 30% of your gross monthly income. Additionally, your total debt-to-income (DTI) ratio should be under 36% to 43% to qualify for a mortgage. You can use online mortgage calculators to get an idea of how much home you can afford based on your income and debts. Setting a savings goal. A typical down payment for a home is around 20% of the purchase price, but there are other options if you can't afford that. Some loans, like FHA loans, only require a 3.5% down payment. Set a realistic goal for your down payment, considering your budget and any potential loan programs. 3. Saving for your down payment. Now let's dive into the steps for actually saving for your home. The down payment is one of the biggest obstacles for first-time home buyers, but there are plenty of ways to accelerate your savings. Open a high-yield savings account. One of the best ways to save for a down payment is to open a high-yield savings account specifically for your home fund. These accounts offer higher interest rates than traditional savings accounts, helping your savings grow faster. Consider setting up automatic transfers from your checking account to your high-yield savings account each month. Cutting unnecessary expenses. Saving for a home requires discipline. Take a hard look at your spending habits and identify areas where you can cut back. Whether it's dining out less, canceling unused subscriptions, or reducing impulse purchases, every little bit helps when it comes to saving for a home. Side hustles and extra income. If you're able to, consider taking on a side hustle or finding ways to earn extra income. Freelancing, tutoring, delivering food, or renting out a room on Airbnb can provide additional funds that can go directly into your home savings account. Down payment assistance programs. Depending on your location and income, there may be down payment assistance programs available to help you buy your first home. These programs can provide grants or low-interest loans to help cover part of the down payment. Research available programs in your area to see if you qualify. Cut back on big purchases. Avoid large purchases such as buying a new car or going on a big vacation while you're saving for a home. Keep your focus on your goal and remind yourself that every dollar saved brings you one step closer to owning your home. 4. Improving your credit score. A good credit score is essential when it comes to qualifying for a mortgage with favorable terms. Here's how you can improve your credit score before applying for a loan. Check your credit report. Start by checking your credit report for any errors. You can get a free credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, once a year. Dispute any errors or inaccuracies to make sure your credit score is as high as possible. Pay your bills on time. One of the most important factors affecting your credit score is your payment history. Make sure to pay all your bills on time, including credit cards, student loans, and utility bills. Set up reminders or automatic payments to ensure you never miss a payment. Reduce your credit card debt. High credit card debt can negatively impact your credit score. Work on paying down your credit card balances to reduce your credit utilization ratio. Aim to keep your credit utilization below 30% of your available credit. Don't open new credit accounts. Avoid opening new credit accounts while you're preparing to buy a home. Each new inquiry can temporarily lower your credit score, and lenders prefer to see stability in your credit history. 5. Final preparations before buying. Once you've saved for your down payment and improved your credit score, it's time to start thinking about the home buying process. Get pre-approved for a mortgage. Before you start house hunting, it's important to get pre-approved for a mortgage. A pre-approval letter shows sellers that you're a serious buyer and can afford the home. It also helps you set a realistic budget for your home purchase. Hire a real estate agent. A good real estate agent can help guide you through the home buying process. They'll help you find homes within your budget, negotiate with sellers, and walk you through all the paperwork involved in buying a home. Start house hunting. Once you've been pre-approved and have an agent, you can begin looking at homes. Keep your budget in mind and be realistic about what you can afford. Don't be afraid to negotiate on price. And remember to factor in additional costs like closing fees, home inspections, and repairs. Saving for your first home in 2024 is possible with a solid plan. Focus on budgeting, saving for a down payment, and improving your credit score. Get pre-approved and work with a real estate agent to find the right home. Stay disciplined, and homeownership will be within reach.